Everyone, how are we all feeling today? Good to see so many people here in the chat. It's good to be back home in front of a proper computer where I can properly chart things and see what's really going on. If you are new here, welcome. If you are returning, welcome back. Be sure to leave me a comment in the comments box and let me know that you guys are here. Scott, hello from California. Who else have we got? Rata, Brandon, Theo. Lots of comments about the TTC indicator I can see. Who else? Tom from New Jersey. Awesome. All right, so I've got a fair bit to talk about, and it looks like Houston has a problem with crypto right now. So let's get into this. I'm going to actually start by zooming out first because I want to really talk about something that's on the daily. First of all, because it is something I pointed out a while ago and we were kind of waiting for it to happen. Where did all my drawings go on this? Anyway, so on the daily, a fair few weeks ago, I pointed out that it did seem like there was another drop due for Bitcoin. We had let me draw it out for you. We had an M formation up here. This whole area here was drop level 1 with a retrace here, drop level 2, retrace here, and we were due for drop level 3. However, how far drop level 3 went, kind of, that's the issue that we have next. So it does look like yesterday's trigger was the start of drop level 3. Now, when I look on the daily time frame, I can clearly see 1, 2, and then yesterday 3 hits to the downside. So the question now is this level here where we previously broke down in June of this year, is that the low? Like, are we going to hold there, or is there worse to come? Now, if you've been watching me for a while, you will know that in addition to just normal price action and technical analysis, we don't need this line anymore. I also watch very closely the miners break even price, which is currently sitting at 17,739. I just checked that this morning. The interesting thing is that level does line up with this wick zone from June. So that is definitely an area that I'm watching for now as a very, I really want to see what happens there, because to date, ever since I've been watching the miners break even level, we have never broken below it. So, not to say that we won't, because a lot of things are changing in this cycle that from previous things that we were able to rely on, but it's definitely something to keep an eye on. If we do break that level, then looking left, actually, let me just zoom out because it's far away. The thing I don't like is that if we do break that level, which, look, guys, there's a high chance, right? But let's just not get, let's not get emotional about it. But if we do break that level, then the previous vectors that we have are all the way back in 2020, which is kind of a little bit too far to be valid, in my opinion. So when we're looking at this particular range here, the other thing that lines up with that 17.7 level is the fact that we do have a fairly large imbalance there. Obviously, we have that because we've only wicked into there once. So that's one other good point for the 17.7 level. And then if we zoom out even more, let me just try and get all of this on one screen. We can then also see that if we include this run up here, that we've got this level that shows, like, even back from 2020, that this is a high volume area. This is where people are happy to transact, basically, because we do have this spike out. If we drop under that, that's when we fall into the imbalance territory. And the next kind of major imbalance is down here, which sits between 14,000 and 14,800. And what I'm pointing out to you is this little area right here. We can see a little dip. In addition to that, if I zoom in on that area, what gives confluence to that little dip there is the fact that we do have an partially unrecovered market maker candle right there. So that's not my area of interest right now. It's my area of interest if we break the miners break even level. So I just wanted to point that out. What else did I have to say about the daily? I think that's all I have to say about the daily. So let's go down and have a look at the 4 hour. What we really want to do now is find the time frame where the model is very easily seen. Excuse me. And in my personal opinion, I think it's pretty easy to see it on the 4 hour time frame. Didn't necessarily have an M formation, but we did have, hold on a second, let me point it out. We did have here and here and here. We did have 3 hits to the high after having our rises. And then we had a sell-off. So this here could be drop level 1. This is the board meeting retracement. Drop 2, board meeting retracement. And we're in drop 3 now. So it's a matter of waiting for price to get into a vector candle zone. And it's not there. Like where price is right now, it's not eating through any previous zone. Even on the 4 hour, when you scroll back, there isn't anything until this highlighted box here, which is just the remainder of this green candle here, the wick of it. Again, takes us back to that miners break even zone. So let's just say to not, to have a zone, we're looking at 17,590 to 18,290. That's the level that kind of makes sense that price will come down to. I can't see anything when I look left that gives me a reason to believe it's going to bounce any earlier. And if it does, I'd probably be fairly skeptical about that anyway. So if we're going to bounce at all, I would prefer price to come into a zone where it logically makes sense for it to bounce rather than just dropping down to lower time frames and looking for W's from right here where price is right now. Now, let's have a look at the 1 hour. So from the 1 hour, what we really want to do is try to identify the most recent peak formation high or low and start our count from there. So on the 1 hour, the most recent peak formation high was this railroad track here, which was a perfect 200 EMA rejection, which is a trade setup in this strategy with a railroad track, pretty much, candlestick formation. That was a very, very, very key reversal signal and area, a kind of hint to short. Even if you didn't get that, you got a second chance because you got another railroad here that created the M formation. So if we're counting from our peak formation from the start of the week, then this here is only drop level 1, guys. So I see a lot of people looking for W's and I don't know why. I don't know why. Sorry to tell you. But, excuse me. So moral of the story is that was our hint there. Now, the 15-minute also gives us something interesting that I want to talk about from yesterday. So on yesterday's video, when I filmed, we were in the midst of this little pump here. And I think, I can't exactly remember what I was saying, but I think, yes, it was the 1 hour 50. So we needed to come back above this area for me to be interested. So this purple EMA would have been, let me just double check. No, the 1 hour 200 was what I wanted to break. It was the 4 hour 50. They're all basically, they are the same thing. So we got this one fake out up here, but then you can see after that, we failed to break the EMA at all. We had a full recovery of that push. What I had said on yesterday's video is that if there was going to be continuation to the upside, we needed to come back for a retracement after this push and hold above the EMAs. So you can see here we did not hold above any of the EMAs. So that was the invalidation point to continue to look for longs. And then from there, it's a new reset. And we got that information, we got the EMA rejection. There was a lot of things there. We could not break above the previous high of the day. There's a lot of things that were fairly bearish there. But then again, if you zoom out and you decide that, you know, that's your M. Whoops, sorry, one second. If you decide that that's your M there, then this is only drop one. This is board meeting, and there should be two more to go, which is fairly scary. But, you know, if you're following the model and the model is to play out, I'm uncertain why we would be looking for W's. Now, Ethereum actually gave us a better look, gave us a better hint of this. And to be honest with you, I follow Ethereum much more closely lately because the model is just much clearer on Ethereum. Let's have a look at this. So we had a W formation here at the start of the week. We had rise 1, retrace, rise 2, retrace, rise 3, which could not break the previous high of the day. That was your hint there that the move may be over. I've talked to you before about when price reaches a target. This target, mind you, was right in a candle vector zone at the bottom of it. Another hint to take profits. And I've mentioned to you before that if price returns to a vector zone for a second time, that is at your target and it can't break through it, that is where you take profits. So that there was the hint of where to basically exit your long. Then we came through for a final damage. Now, from that point on, you would have, or should have, if you're following the model, you should have seen 1, 2, 3 hits to a level, could not break through the whole vector candle zone, probably wasn't even the 50% line. Let's measure that out and check. Yeah, touched right on the 50% line with the third hit. So that there should have been very bearish to you. And then from that point, you got your M right here. So see, ETH is so much cleaner. Like if you're trying to learn this strategy now, not only is ETH cleaner, there's bigger percentage moves in it. So bigger money to be made. I highly recommend if at any point you just can't make sense of what Bitcoin is doing, have a switch over to Ethereum and look at that because it's very clear here. So as I said, we had these 3 hits, could not break the initial high of the day. We had the failure of the 50% vector line. We had the information. We had drop 1. We've had board meeting. We're in drop 2 now. It's so standard here. So has Asia opened yet? Not yet. We've got a couple of minutes before Asia opens. So remembering this could be, you know, a dead gap zone fake move. But again, if the model is to play out, there should be one more drop to go, which does not then make sense to be looking for W's. So on Ethereum, I have 2 areas of interest marked out. This one here at around 1505 to 1516. We've not quite made it there yet. We've got a wick just above it right now. If we can't make it into a zone and we get the right structure, that could be a hint that, you know, they don't want to come back to rebalance this zone. But the problem then is if you started to look for W's after a drop level 2, you could be just longing into EMA rejections before drop level 3. So even if you got the perfect long setup here, I personally would not be interested in that. I only want my M's and W's where they hang out. You guys know the word that goes in the middle of that sentence, but they don't hang out at level 2. So for me personally, if we get a bounce from here that is above this area of interest, I'm going to leave it. My entry would be only, only if we had any of these EMAs reject, I would short and ideally into this lower area of interest between 1440 to 1480. If this is it and, you know, we continue up from here, which would be strange, but if we did, then I would only look for longs once we've broken above the 50. So that's my play. That's kind of how I'm feeling about things. Yes, it would mean, if we get a W from here, I miss out on that move until it gets past the 50. But it just doesn't make sense for me to look for a W at drop level 2. And that is how I feel about that. Now, let's have a look at the heat maps, if anything has changed. So we can see some significant long orders at around the 18,500 level. Shorts kind of around 19,000. So I did mark these out earlier. Let's just go and have a look and see if they're still the same. So these were the sell orders before I started an Asia Open. So between 19.2 to 19.050, they still there. Yeah, we've come lower. Which means that, we definitely want to keep price below. So 19, yeah, around 19,000 is where we're looking for shorts. There are some longs here fairly significant at 18.5. But again, if price were to bounce at 18.5, why would it bounce at 18.5? When you look left, there's, from what I can see, let's keep going, see if there's any on the 15-minute. Because there wasn't any vector candles on a higher time frame. Jesus, we have to go back a long way. Hang on. We have to go back a long way to find them. It should be around here somewhere. Okay, so do we have any around here at around 18.5? That's just a week. I wouldn't count that. And then we're looking here at these candles here. So the only vector we have that is around 18.5 is a 15-minute one, and it's not a super high volume one because it's blue. But it does still count. So that's what we're looking at, is that one right there. If we do get into that 18.5 region, then again, we're going to see if we get a full recovery of it, or do we only get a half recovery of it. A half recovery would be a good sign that it's going to be at 18.558. If we get a full recovery of it, I would say we're probably going back down into this area here from the higher time frames. So let me just refresh that now. Yeah, so now we've got a bit of confluence in that area there where the long orders are. But still, I think this might just be Asia's initial low of the day, but it's still in the wrong level. So just be aware of that this might be the area that you get a bounce to take you to the EMA sell orders. If you notice here that these sell orders line up with the 50 EMA on the 15-minute time frame. So this may just be something that gives us a bounce to the 50 before we come down for 3. So just keep that in mind. If that doesn't happen, then price is going to break the 50, hold above it, and then that's going to be a better area to long rather than trying to be a knife catcher, which sadly I saw a lot of happening last night. Now, was there anything else? Why did this happen? Here, it happened because of a news event last night. A lot of people said there were no news events. There was. It was this final services PMI. Price dropped literally on that, so that was not good. What have we got coming up today? 7 p.m. We've got the Monetary Policy Report hearings, so watch out for that. That's going to be around the UK Open, I think, a little bit after the UK Open. Tomorrow is a plethora of things. So, I don't even know if I'll trade at all tomorrow. All of this stuff is not not really something I want to be part of, especially when unemployment claims come out. It's always a market mover. If you can't be ridiculously active on the charts tomorrow, it's best not to play at all. And then after that, we calm down. So just be aware of tomorrow. And then even next week is not great, but we'll talk about that next week. There's a lot of things coming up. I think also we had the deadline for the new digital assets executive order was due yesterday, which is this one here. That may have had something to do with Bitcoin moving, because I did notice that Bitcoin moved a lot before anything else did. Dixie wasn't pumping when this had a massive drop down. So that means it could be a specific crypto event, which may have been this one. I have not yet been able to find anything that has come out of that report. So I just know that it was due. So that's just speculation at this point in time. And what else do we have? As we know, we've got the Ethereum merge. That should be around the 14th, 15th. So about one more week to go. By the way, guys, if you're enjoying this content, please smash that like button and hit subscribe if you're not already subscribed. And just to let you know, in case you're not aware, we have moved our memberships off Patreon now. So there's no need to wait till the first of the month to join us if you're wanting to learn this method in detail. You can now join at any time and you do not get double charged, as we are no longer with Patreon. So if you're interested in that, the links to join us are in the description of this video. Everything else is still the same. You just don't have that double charge problem. Now, looking at S&P, we are right in a area of interest, a previous vector candle zone on the 4-hour time frame, this little blue one here. So it does look like we're going to have a full recovery of that. The next step is to watch if it actually breaks down from it. Again, if it does, not good for Bitcoin. We'll probably just head down with it. The problem being that if we do break it, there isn't sorry guys, there isn't any more unbalanced zones until this one right here. So that could be fairly dramatic. So keep that one in mind. The same for Nasdaq. We are just entering a area of interest now. I think I marked this one from a higher time frame. I think this is a daily one, and we're entering into that now. So I want to keep an eye on that. And again, for as long as the Dixie is going up, everything else is dead. So another thing to just keep an eye on. Is that all I have for you? Oh, let's take a quick look at high block. We'll look at this one here. So massive shorts came in last night. This is just so juicy for the market maker. However, is it time for the market maker to turn price around? In my opinion, no. This is still fairly thin, even though we had these 3 levels of high orders, which is great. The actual liquidity is fairly thin, because when you look at these total shorts and longs, 481 shorts, 83 longs, usually we get much higher than that. We usually get at least one-sided 1,000. And so we're nowhere near that. Isn't a lot of liquidity below, but as we keep going lower, if we keep going lower, people are going to pick bottoms and open long positions. So that's not a problem. But currently we can see 18.13 is the lowest big area. Then we've got here 18.32 is another one. And then, here at around 18.5. So this is the first area to watch out for, because the 18.5 lines up with everything else that we've talked about. But if we break it, then, things are going to get dramatic. Now, the chances of us breaking it are fairly high, because when you look at the delta for the shorts, it's at 13 billion. We don't usually see a change in direction until we're above 20. Now, sometimes it can happen around 17, so you don't just assume we're going to keep dropping until it gets there. But usually you'll start to pay a lot more attention if we do get around the 20 billion. So sitting at only 13 does kind of tell me that there may be more downside to come. So just keep that in mind, but don't be a candle chaser. If the setup is not good, then we don't take it. You're not going to short from here when we've had 2 weeks into this zone. You need to wait for price to come up, reject at a decent EMA, and give you a real juicy position to hopefully then come down into this area if it can break the 18.5 area. That is it. Do I have anything else? What is that traffic light indicator at the top? That is ours. If you go to indicators and you just type in market session, and it's here, market session times by trade, travel, chill, this one here. That's it there. We do have another one that's called market maker session times. Don't use that because that's the wrong one. So just look for market session times. And then you have the option to add it up here as the traffic lights, as you say, or it can shade your whole background. It's up to you. You're literally the only person that knows anything on YouTube. Oh, that's lovely, but there's a lot of people that know a lot of stuff. Okay, guys, well done for all your comments. I can see a lot of things. Have you marked vector candles on S&P and Nasdaq? Yeah, I marked them. We just talked about them. Yeah, so these ones here and here. I marked them mostly off the 4 hour. When I'm looking at S&P and Nasdaq, I really am only looking higher time frame. I don't look for scalps. I don't really go anything below 4 hour. Mostly I'm just interested in what is happening on a macro level, because the S&P and Nasdaq and Dixie and stuff, they affect crypto on a macro level. They don't affect it in a day-to-day scalp move. So that's where it's not 100% correlated. If these guys have a bit of a break and go sideways, Bitcoin can give you a pretty good trade as a scalp move. But when they have a bigger move, so on a higher time frame, then it's going to either pump crypto with it or bring it down. So that's some more information for you. Do you ever use Heikin-Ashi candles? I did in my learning period of trading, but I don't anymore. I don't know why. I find it not that best, especially the thing with Heikin-Ashi is if you're going to use them, they're good, but if you can't set your stop loss off them because you'll most likely get wigged out. So it was just annoying to keep flicking back and forward, and I figured I don't really need it. All right, guys, I'm going to leave you there for the day. Have an amazing day. Be careful out there, and just remember, M's and W's aren't wherever the hell they hang out. They need to be in a specific spot. Hopefully tomorrow we get a midweek reversal and have our W's then. Until then, have an amazing day, and I'll see you tomorrow.